Welcome to CS Week Marketplace, third Tuesday at 12 p.m. Eastern webinar series. These webinars leading up to Conference 37 are the top-rated gold and platinum sponsors from Conference 36. I am John Sild. I'm with CS Week, and I'll be your moderator today. CS Week and Conference 37 will be held from April 29th to May 3rd at the Tampa Convention Center in Tampa, Florida. Early registration is now open. This program will be recorded and available for playback, as are the other archive presentations found under the Educational Venues Third Tuesday link on our website. Today's program is Empowered Consumers, Future-Proofing Electric Utility Service, presented by Odd Even Bustnes and Sumit Kumar Ray. Attendees are encouraged to upload questions in the QA panel to all panelists. Make sure you list it as all panelists as they arise. However, all questions will be held until after the presentation for the Q&A segment. Our first presenter is Odd Even Bustnes. We're honored to have him. He's in Oslo, Norway today. He's with Xynteo. Odd Even Bustnes has worked internationally as an investment and consulting professional with a focus on low-carbon solutions. He began his career at McKinsey & Company's Washington, D.C. office as an associate consultant, working with upper and middle management of Fortune 500 companies. After leaving McKinsey, he worked as a principal at the Rocky Mountain Institute, where he continued consulting for multinational companies in the area of energy, alternative energy, energy efficiency, transportation, and energy security. From 2006 to 2009, he was a partner at Secorin Vest Management AS and CEO of one of its portfolio companies. Odd Even has testified before the U.S. Senate and given numerous speeches on options related to low-carbon solutions. He is the co-author of Winning the Oil Endgame, a book partly funded by the U.S. Department of Defense that details the profitable business cases and public policy options that collectively would eliminate U.S. oil use over the period of 3 decades. Odd Even holds a MSc in Chemical Engineering from Oxford University, and an MPA from Princeton University, and a BA from Dartmouth College. Our second presenter today will be Sumit Kumar Ray. He is the head for Center of Excellence Utility Business Unit for Tata Consultancy Service. He is in Bangalore, India. So we welcome both of these gentlemen. Sumit has over 17 years of experience in projects involving IT and instrumentation and automation. He is the architect of TCS's framework for smart metering and is presently driving all of TCS smart metering grid initiatives, and he leads the program support for TCS metering projects in UK, US, Australia, and his hands-on experience with leading metering systems, MDMS, and home automation products. Sumit has worked with ABB and Emerson Electric in the past, where he has worked on power plant automation projects and power SCADA projects. Gentlemen, we thank you for joining us today.
John, Odd Even here, and thank you so much for that very kind introduction. I am very pleased to say good day to everybody on this WebEx and to introduce here the findings of the most recent work that Tata Consultancy Services and Xynteo have collaborated on just now. And with me, I have Sumit Kumar Ray, as you heard, as well as I'm accompanied here in my office by Danny Zaitsev, one of the Xynteo analysts. And again, I'm Odd Even Bustnes. I'm Managing Director of Technology and Head of Analysis here at Xynteo. The way we wanted to do it today, Sumit Kumar and I, was to basically have about 40-45 minutes of introducing our findings to you all, and then in the presentation itself, I'll lead off, cover section 1, hand it off to Sumit Kumar, Sumit Kumar will cover Section 2 and hand it back to me. And after Section 3, Sumit Kumar and I will jointly cover the conclusion. On page 2 of this presentation, there we go. You can read up a little bit about Xynteo and Tata Consultancy Services. Very briefly, Xynteo is an international strategic advisory firm focusing on low carbon, and TCS is, of course, a global IT services business solution and outsourcing organization quite well known to this industry. And we have, over the past 3 years, collaborated in multiple areas, as we can see on slide 3. This is our 6th industry-specific focus, where we have developed thought leadership jointly. This area, electric power utilities, you can read about it in more detail in the report on the right called Empowered Consumers, the Next Wave of Electric Utility Services. Today, what Sumit Kumar and I would like to cover, and here we are, in terms of an executive summary, there are 3 key things that we would like you to take away from today's session regarding the empowered consumer and the upcoming, in fact, some would argue, the current utility transformation. Number 1 is that the utility context is definitely one of transformative and in many areas rapid change now. And number 2 would be that it's already in many areas about finding new ways of holding on to the customer or the consumer for electric power utilities. Finally, the 3rd key takeaway from today's WebEx would be that leading utilities are currently implementing for consumer value. And what we'll do over the next few minutes is go through the following 3 sections plus a summary. And basically the 3 sections are the why is this critical right now, what is this all about, and how to deliver consumer value. The changing utility landscape is section 1, and this is why is this important. One of the key things that is very important to understand is the main set of drivers behind these changes. And we're seeing a combination of a shift in supply and demand balance, both resource scarcity and environmental concerns driving new kinds of policies and regulations, very much a new set of technologies entering into the electric power industry, both physical and digital, and frankly, an increasing premium on capital via risk, driving both empowerment of consumers as well as new business models, opportunities, and entrants into this, all of which is putting pressure on the traditional utility model, if you will, of delivering kilowatt hours. Are we seeing this already? Yes, we are. And just very quickly reviewing 5 very well-known utilities, 3 here in Europe, 1 in the United States, and 1 in India. What we're seeing when it comes to E.ON, for example, here in Germany and in Europe, I should say, very recently, Markus Schenk came out and said, we're actually beyond the point where we are feeling sorry for ourselves. And you can imagine with all the changes in Germany having happened in the last 3 to 4 years, they were definitely feeling sorry for themselves for quite some time. The drivers on the left is leading E.ON specifically to now seek growth from renewables, distributed generation, and new markets. And it is very interesting to see that they are very much going onto the customer side distributed generation business. They're very much focused on utility scale renewables and new types of market opportunities. It's almost a little bit interesting to see that they are now finding a new business in nuclear dismantling advisory. This is how big the change has been for E.ON in the last few years. Going on to RWE, one of their key C-level executives said in Davos this year that RWE is planning a dramatic reduction in power generation business, and that growth from service will be critical for RWE. Generation is out, services are in. There will be a very significant scale back of central generation business, and the energy service business is very much in the driver's seat here in order to be able to cope on behalf of shareholders with the impact of the German power transformation. And it's not, in fact, it's not actually the best option to go for new services. They've clearly stated it's the only option. Moving on to the third European utility that we can just summarize very quickly for everybody is Vattenfall, another very large utility here in Europe, very much still committed to eliminate all their emissions by 2050. That was what Xynteo said, the CEO said in 2010. And absolutely, the future value growth going to be on the consumer side, whether it's energy efficiency services, distributed generation, and distributed storage, or centralized storage in their case, or electric vehicles. Very much a big opportunity area. Let's just take a quick look now at Tata Power. India-based utility, have operations outside of India as well, of course. When we interviewed Anil Sardana in November last year, he was very clear on this thing that you just got to forget about customer satisfaction. What we need is customer affection. And they've really taken it to heart. Tata Power is very focused on renewables, building and growing the share of renewables in their generation portfolio. They know that it's going to lead to an enhanced focus on energy services, and they have several development efforts going on, whether it's on distributed generation or on storage. Switching right over to America and all the way over to the West Coast and San Diego Gas and Electric, already in 2011, their smart grid deployment plan talked about a single summary point, and the 350-page plan is summarized in these few words. Our customers are driving our deployment plan. We got to get on to this bandwagon of understanding what to do about customers already being at the center as a key growth enabler. Now, San Diego or SDG&E have a long track record when it comes to these topics. They've, for a long time, looked at smart grid. They have a lot of stakeholder collaboration going on. They're very innovative in the utility space, and they very much see the customer side as an enabler. So when we talk about San Diego Gas and Electric, we see them as effectively as an industry leader. So for the changing utility landscape, what we would say is, as a summary, is that the customers are very much setting the agenda. The value creation is recognized more and more as a customer-led type of value creation. And if we have these 5 bullets in front of us, that we would say that essentially San Diego is claiming customers are driving their deployment plans. We're seeing a move to clean energy, consumerizing electricity. If utilities want to play here, electric services or electric power services will be critical. New services, in fact, are viewed by some as the only option to future growth, essentially leaving by the wayside the customer satisfaction KPI and going for customer affection. And of course, if we're in this business 40 years from now, having eliminated emissions, absolutely will we have to transform the generation side, whether it's on the centralized generation or indeed on the consumer side of the meter type of generation. So the utility landscape is very much changing. It's all about the consumer. And let me now turn it over to Sumit Kumar Ray to just cover a little bit more about the details on the what. What is this all about? Sumit Kumar, over to you.
Thanks, Oliver. So if we move on to the next slide, so we see how the consumer is going to change. So the consumer is no longer a taxpayer. He is actually a partner. He is now producing. So the consumer is turning to prosumer. And the interaction with the consumer has to change. He is the empowered person now. It's not a providing business anymore utility, it's about serving the consumer. And so if we look at the power landscape now, it's going to change completely. It's not about building more power plants, it's about building virtual power plants and how you aggregate the generation happening within the consumer and turn it into as a power plant. Or for that matter, electric vehicle, if everybody on the same transformer charges at the same time, your load is going to shoot up and the transformer is going to break. It cannot sustain. So it's not about throwing more infrastructure to sustain, it's about managing the consumer so that if somebody has a 7 a.m. behavior, another person has a 8 a.m. behavior. And it's a neighborhood behavior you drive so that the electric vehicle are integrated, but we don't have to throw more infrastructure. So if we look at each of these, there is several possibilities, and it's all about value creating around the customer. And if you look at the happenings in the marketplace too, why did Toshiba buy a consumer electronics company buying a metering company? So the convergence is evident. And if you look at any of the consumer electric companies now, so they are consumer electronics companies, they are having ambitions to get into microgrid. So it's because the convergence around customer is happening, and the underpinning ICT infrastructure or the applications are also there. So it's the distributors, the network operators are now becoming a distributed system operator, because it's not about delivering power only, it's all about delivering service and changing the behavior of the customer and have a win-win between the utility and the consumer. So if we talk of some of those core value creations, for example, the electric vehicle we just talked about, or for that matter, the demand response. The inflexible demand of the consumer, if we can make it flexible, what a great win there is possible. And then, energy efficiency is the other one. And in each of these cases, it is not the utility which is going to drive it, because the electrothermic window the utility won't sell. It's the consumer who is going to buy it. And it's a consumerization of energy technology, which the utility is at the receiving end. And utility has to change and create its value around the consumer to make the best out of it. So the facilitating technologies are also there, and how we actually create this value around the consumer is going to be the winning theme in the coming years. And if we look at the landscape, the ICT landscape, it's also going to change so that we can deliver these values. All this time we had functionality-driven core applications. It was about delivering a certain kind of functionality, a certain kind of service to the consumer. But now the happenings are already there. So a location or mobile application is, somebody is carrying a mobile, and we have the advantages of taking the location awareness from it. Or any other sensor within the home is being deployed, irrespective of the utility drives it or not. And you have so much of data, and you have to take advantage of those data. And now electric vehicle charging application is not a purpose-built electric vehicle charging application like we were building other applications around customer services. It has to get the context out of the data. It has to understand where the consumer is probably moving and what can be the propensity of the electric vehicle now to charge or discharge. And with that data, it has to bring out the context out of it and deliver the electric vehicle application. So the whole application, the strategy is going to change. It's not going to be a application which is generating data. It has to be a data from which context is derived, and we deliver value to the customer. And the transition needs to be managed. So we need everything there. So the consumer's profile or the understanding we already had in our data warehouse kind of systems is already there, and the existing situation where the big data, all the variability and the velocity of the data which comes in, gives us rich information, and probably we need a processing which is fast enough to deliver the value immediately. So the immediacy of it. So probably it's all which needs to be there, and it's about bringing out the context from the data and delivering the application. It's not really changing the applications, purpose-built, making a purpose-built application to deliver a functionality. And the future of the ICT, how it's going to look, so that we can create the value, is there is a summary on this slide. So we have several sources at the bottom, raw data and sensors, and utility is not the generator of that or not the driver of that. The consumer is driver of that. And on top of that, the key element is they are only facts, but it is about perceptions. So it's not only the facts of data, it's about perception we make out of it, or the perspectives we make out of it, and the personalities we understand from that. So that is the element of the context which we need to bring in to deliver the value to the consumer. So there would be the core applications which are already there. It would be augmented by the data-centric context-aware applications, and then the third element would be applications which are actually outcomes you subscribe to. It's not really applications. So it can be a software as a service or actually outcome as a service. And the composites of this with the major element of georeferencing, because to get the meaning out of it, we need that georeference. So be it under a storm condition or be it under moving electric vehicle condition. So the geo context is so important, and we would need, and then again the channels which are already there. It's starting from the Facebooks and the Twitters to the traditional ones that need to be integrated to deliver the context. So in a nutshell, the ICT of the future would probably look like this and would be ready to deliver the value around the customer. So this service delivery has quite a few things, and the three pillars which are going to drive it is about the offering, how we actually create a micro strategy probably around the customer and create an offering for him. It's also about the service quality and the service communication, which is already there. And our focus today is about the service offering tailored to the consumer. The service quality and service communication is given. Here, the availability and the reliability of the network is anyway there. And but the investment we were making to the assets so that we have a reliable and available network, or deliver that quality of service to the consumer, is changing. It's much more than that. Here we are talking of value creating around the customer, and delivering services which are in different dimensions, not only about reliability and availability, which is anyway given. So yeah, so I think this also talks about the same thing, that and the value creation, the opportunities are even already touched upon that. It can be energy efficiency or demand response or distributed generation, and how that can be segmented, how the consumer can be segmented, and for whom what is suitable we can deliver. So it's important how we actually future-proof ourselves as a utility. We know our customers at a micro level to a great extent, just like the retailers do, and then there is the success in delivering value and actually partnering the consumer so that he and the utility has a win-win in between. And to get there, probably we need a deeper understanding of the services we can deliver, so be it a demand response or be it energy efficiency. And I would request Oliver to take you through some of those services.
Excellent. Thank you, Sumit, Kumar. That's great, and I think it gives us a very clear sense of what is at stake here, and it's all about the consumer, and it's really driving the ICT architecture to support such a utility transformation into a new direction. And you alluded to it in terms of the how. How do we deliver consumer value? And I think you alluded to it because you say that it's very much now about tailoring a service offering to each and every customer, and it's very much about, therefore, a segmented smart power strategy development. And the way we want to cover that in this third section is to give the following feeling. What we've got to first of all do is to understand much better a look ahead. And to do that, we've studied very hard specific findings on optimal mixes of technologies and business models for utilities that are customer segment specific. And to illustrate this, this section goes into which kinds of service models to go after. It will indicate a little bit about how we find those energy service models. And we will start that by briefly reviewing outputs from a modeling effort that we've done for the state, the U.S. state of Florida. And then we go a little bit into the details of how that was done. And again, to not lose ourselves in the details, the critical point to come out of this section is specifically on how utilities can and probably should evolve their smart power strategies for individual or specific customer segments. So when we then look at the Florida example, and that's just the next 2 or 3 slides, first of all, one of our key findings is that there are sizable structural changes to be expected coming out of the next couple of decades, if you will. Customer-side technologies are having definitely a very large impact already on this regional power sector, and they will continue to transform it for the next few decades. Critical change areas include structural changes to the demand side, very different customer participation levels, very interesting jobs opportunities for the Florida economy. In terms of the mobility side, we will see some significant changes there as well. And in terms of utility margins, not necessarily a bad story, by the way. It really depends on what actions the utilities take today. And finally, there are potentially some significant structural impacts for the carbon story for the state of Florida. Sticking to the state of Florida, what's the big deal about consumer participation? I mean, really, what's the big deal? Well, the big deal is illustrated here. Florida consumes about 90% of the electric power goes to residential and residencies and commercial buildings. And a lot of that goes to the residential sector, as you can see here. Well, what we are seeing when we actually look at a granular level at many customer segments for the state of Florida, we will be seeing a significant increase in consumers engaging in energy services. We will see significant uptake across basically all of the big categories: energy efficiency, both in new builds and retrofits, electric vehicles, distributed generation, and distributed storage. And we predict will have a very big effect on the structure of electricity in the state of Florida. Moving right along, let's look at the utility financials for a second. What's the big deal? Well, it could be a negative deal. It could be a negative story in the sense that unless utilities, this is essentially the top left charts, unless utilities seize the opportunity from new services that you can see here in terms of electric vehicle charging, energy efficiency, and distributed generation and storage, they could see a significant reduction in revenue over this period between now and 2050. But there is a lot of opportunity, and the question is are these threats or are these opportunities? Basic story is you've got to understand the size of the market potential for the new services. We also got to recognize that there are new competitors coming out. That's the threat component of this. And of course, we've got to understand the impact of the consumer side developments on demand structure, on the market price, utility assets, and asset-based utilizations and the financials. And this is all at the higher levels. The key thing then would be to be able to have the ability to drill down into the details segment by segment and come out with what business models are relevant for a utility. Just, I believe, a final quick look before we go into the more detail how. Back to the Florida example again, consumers may, in fact, ask for value in carbon. And if they do, even just a modest schedule of carbon value, I believe we put in something like $40 per ton, gradual rise to $40 per ton here. This will have a dramatic effect on the mix. And remember that this is driven not just by the carbon price, but also by very, very interesting and major changes on other fronts too. This is adding it all up. So there are changes to technology cost, and this is just, of course, going to make the carbon-intensive technologies, relatively speaking, more expensive. In a low-carbon scenario with, again, I repeat, rather modest carbon valuations, you're looking at a significant impact from energy efficiency, from distributed generation, and again, this is going to reshape further the relationship between utilities and consumers. And what we're finally noting is that in spite of higher rates, we are seeing that consumer bills are in fact going to be reduced somewhat, and significant investment in utility generation capacity would be avoided. So again, what is the big deal? Well, how to do this, how to go after this. This is first and foremost a story about targeting the right customer segments. This is where we see the beginning of the switch to new utility capabilities. Targeting the right customer segments will require a very granular and as well a long-term set of power system tools that are customer specific. Some of them are listed here on the right-hand side. Without dwelling on these capabilities in terms of analytics, let's go to a little bit more in detail the customer segmentation point. And this, we believe, is a critical path issue. It's a critical path issue because you will recall the slide we put up earlier about the changed share of engaged consumers. Well, in order to understand and appreciate how these consumers are going to be engaging more and more, you've got to understand the specific customer segments that are actively engaging in all this. And key questions that now can be answered revolve around what are the general business cases, what are their best business models to attract different customer subsegments, and which services should be prioritized. And we strongly believe that you can do a lot of, let's call it rough strategic preparation work by really understanding the details of these questions in each of the segments. So with that in mind, customer segmentation being critical, one of the things that we also know is a key how is this notion that one has to understand in a detailed way how tariff structures impact consumer behavior, utility, and society. And what we're just using here as an example to illustrate this, of course, is the case of electric vehicle charging behavior. depending on the kinds of tariffs that electric vehicle users are facing, the load patterns of the charging will be actually dramatically different. And of course, this has big implications on the upstream, let's say, asset investment programs that utilities have to work with. Payback times are going to be very, very different. And critical questions are around how should tariffs be designed, perhaps not just for electric vehicles, just giving you a hint. How should they be designed to incentivize smart energy use by consumers with this emphasis on transparency and fair allocation? Tariff schemes will be very important at the customer sub-segment level. I'll share with you one of my personal visions on this front. Why might we not see individual homes with individual rate structures in the future? One could easily imagine that, and it could make a lot of sense for the future electric utilities to provide such services. Moving right along to another key technology enabling area is demand response. And this is where we'll see, of course, that demand response will need to accommodate price and incentive-based programs very much so. Key factors here are the first three, at least, listed on the right, where we've got to understand the demand response logic. You've got to look at the customized incentive-based demand response programs that can be designed and their impacts, as you can see on the left. And each and every program should be applied at the customer type level. I think the charts on the left are self-explanatory, but demand response can definitely be a very important, let's call it, asset-based or investment driver. And this has to be applied in a very intelligent way. And by intelligent, I'm talking about really being aware and really tracking all the different appliances that are emerging and the level of intelligence in those particular appliances. Another key technology development area that utilities are very quickly coming to grips with has to do with distributed generation. And this is where we would again argue for a meticulous tracking. Otherwise, the risks to the business model emerge. We say here that the devil is definitely in the details, and it's true. I mean, it's merely a start to have a good, solid handle on the technology cost learning curves looking forward. Way beyond that, you've got to look at the system sizing, depending on the individual load curves. You've got to look at things like, for solar PV at least, simple things like the roof space constraints, and so on. And not to forget, if you're a utility in this business, you've got to follow the system stock and flow of systems out there in order to be able to handle many of the, let's call it, system-level interactions. I'm talking about the grid, balancing the grid, etc. Finally, one of the other key technology areas that we argue are very important to follow in quite some detail, and here's where there are more devils in the detail, is on distributed storage. Distributed storage could change a lot of things, even on the other customer side of the meter technology areas. For example, it could drive new levels or new formulas, if you will, for distributed generation sizing. You would see differences now emerging on charging and discharging, and this has got to be tracked and understood. So at the end of the day, distributed storage sees another layer of details emerging, and yep, you guessed it, we are talking about big interaction effects. Absolutely right. And so this is where, personally, I would call it the ultra-critical issue in order to get the business models and the deployments right. This idea that, yep, we've got a lot of action on the customer side going on, that's one thing, and that's got to be understood one by one. But they also are interacting. A little illustration of that here on this slide. This is this interaction of the various key technology areas. Very important. Customer investments can be very different for different customer types. Yes, we get that. But in the top right-hand side, it's also, this is the simplest idea, of course, the the size, the capacity of the PV systems that you would install very much depends on the efficiency of the target home, if that is your constraint to deliver an optimal system for a given house or a commercial building. And there are more complex interaction effects. We will be happy to address those in Q&A. One of them is noted in the lower right. Very happy to return to this point and explain more about the interaction effects. But I think understanding them is very, very important. Moving to the next slide and getting to the end of this segment on delivering the customer value. This is what we're talking about. Yep, there's a lot of details here, but the point is that all the different functional elements that utilities are now going about getting a detailed handle on are interacting, and they're interacting in complex manners, and those interactions have to be understood. It's not just about the customer-centric element interacting over on the right here. In fact, it's also about the interaction between those elements and the more standard utility elements. What are the centralized generation capital allocation schedules going to be looking like now, given all this stuff that's going on in the top two-thirds of this chart? So the interactions become very, very critical, and that is just simply summarized in a more simple way on the next slide. I think we can go to slide 36. Some key insights and value drivers that utilities are now already looking at deploying, or in fact in the middle of deploying, as we heard in the first section. Market trends and analysis. It's about the realistic uptakes on the customer side technologies. That's one thing, but how do we get in on the action? And what are the impacts on utility assets and financials? It's very much about customer and product planning, as we heard, and you've got to have tools in place to understand the customer behavior at the sub-segment level under different scenarios. Asset management will be impacted, no doubt, and we're looking at here significant support required for the short and the long-term asset investment planning. We would argue, because of the nature of the game, this is nature meets man, if you will. The nature of the game is very much dependent now on insolation levels and the fluctuations there, wind and wind fluctuations, for example. High precision time resolution is required on the one hand, granularity there, but also you look at that over the long term. We would, what we do in our systems is look at a 4-decade span. Finally, scenario analysis becomes key, because in order to understand business models and the regulatory scenarios, and in fact, perhaps what even to ask regulators for, the tariff structures and other drivers become very important in order to model out which business models to go after in a given segment. So let me then summarize this section. This is very much about how to get to segmented smart power strategies, very much so. And zooming back out to the surface here, we believe that to deliver the optimal mix of consumer energy services with the optimal utility business model for a given segment, you've got to, number one, identify the optimal mix of technologies segment by segment. Number two, you've got to identify correct business models for a given mix. And finally, then develop the required strategic capabilities. And this last point is not necessarily trivial for utilities, and that brings us to the summary. What we wanted to end this particular WebEx on is on capabilities. First of all, when it gets to the capabilities now required to back up a program like this, we see on this particular slide here, 39, what we are seeing is 4 key enabling, and we call them strategic, actually, capabilities. And we're calling them strategic capabilities because if you don't focus on these 4, we are not sure that the transition will be successful. First capability has to do with a customer service orientation. Secondly, have to have technical skills. We're talking really new technical skills. Third out is very much now a focus on strategic partnerships. There's a lot of action out there already. Partnering will be key. And finally, as Sumit Kumar was explaining, new ICT capabilities will be required in order to underpin this transition. So before I hand it off to Sumit Kumar for a concluding and wrap-up, let me just point out the way these capabilities might hang together. This is where TCS and Xynteo have evolved what we call a utility strategic capabilities matrix, and this may help actually map some critical capability strategic pathways, because fundamentally you can group the two technology-related capabilities, ICT capability and technological skills, more referring here to the physical type of technologies. You can group those together on the horizontal axis, and you can also develop a vertical axis around business competencies where customer service orientation and strategic partnering is key. And what we're then seeing is here this very simple framework emerging where you've got technology competencies versus business competencies. And we see that we see many slow starters out there right now. And what we are seeing, though, however, are several key, as we heard, utilities reaching out for the category leadership, as we call it. This is where we see significant investments going on in technology competencies as well as in business competencies. And with that, let me turn it over back now to Sumit Kumar for the last two slides of our summary section. Sumit Kumar, please go from here. Thank you.
Arvind, thank you very much. I think it was very nicely set up. Now, the pathway you just referred to, so where to start and how to actually translate, that is the question. So probably there is definitely a need for a strategic vision, so which is to determine the optimal mix for the utility in the context of the consumer they have. There is a need for a strategic vision. There is need for a hypothesis probably, and to look at what business model is going to succeed in the future. So that's looking in the future and making steps which is immediate and small is a key. And then there is a need of learning. There is a need to plunge and see what are the new services and the best practices which can work well. So whether it is as Oliver said, a customer's individual customer's home a tariff scheme for him exactly, or it is a neighborhood discount like I was talking of, so that 6 customers on the same distribution transformer does use the vehicle differently, so a neighborhood discount is actually the way. So there is some learnings to do around the program design, and then going ahead and implementing it. And the capabilities we just talked about, what capability needs what kind of implementation. So it's not that, again, in the terms of the quadrant we just talked about, it's not that the utilities have to all start at the beginning. Some might be already there to a great extent with a vision, and probably a type C project is good enough. But definitely there is a need to think in terms of different horizons, and while we think of horizon 3, we have to probably start at horizon 1 itself and plan it out. And so the concluding, so what we just talked about was how the paradigm shift is happening. So it's not throwing infrastructure to give the best service, availability, reliability to the consumer. It's a consumer-driven, consumer-chosen transformation, which the utility have to encash, and it's also finding about holding out to the customer in new ways. Otherwise, the utility gets cannibalized, because the switch happens irrespective of the utility does or not does. And then how to implement and some ideas of how to create the value and how to go about doing that. Probably starting at a strategic vision, creating the optimizing mix, and then what are the key ICT capabilities you deliver. With that, I think we can go ahead for the question and answers. If you have anything, then we can answer them.
Yes, Sumit, we do have a few questions that have been submitted. Well job, both Sumit and Adi, and a very informative presentation. The first question I have, and we have to be very cautious of our hour. We're approaching the top of the hour, so I need you to be mindful of that. The first question is, in the TCS Xynteo Smart Power Model, did you test the model with the actual Florida data? And if so, please provide some more details on the input side.
Okay, let me handle that 11 here. And what I will do is actually hand it straight over to Danny, one of the key action men on this model. Danny, any thoughts on this?
Yes, thank you. So overall, we used publicly available information, both on the utility asset side as well as the consumers. Just to give you a few examples, we have looked at the Florida Reliability Coordinating Council plans to understand the composition and structure of the fleet of utility assets by technology, to understand thermal efficiency performance and retirement forecasts, to really understand what's going to happen to the power plant fleet in the BAU case. We have taken EIA scenarios for fuel prices and population growth forecasts based on their reference scenario and their annual energy outlook. We have used national statistical data from sources like CBEX and REX to understand the energy performance of buildings in Florida in more broader regional context where Florida-specific data was not available. We have calibrated the, let's say, the hourly profile of each building type against NEM, which is the key system used by EIA. We have used third-party software, BIOP, which was actually developed by NREL, to model energy efficiency packages, both in response to performance of building and the cost. So overall, these are some of the main sources we have used. And then we have used the assortment of secondary sources for things like cost of technology, forecast, regional driving patterns to understand how EV charging behavior will develop in Florida, case studies on consumer behavior with respect to linkages between consumer investment decisions and payback periods for given technologies and so on. We also did a bit of a reality check of the model by running it for past years, 2010, 2011, and comparing it with real data to see how it performs against sort of a backcasting technique. So yeah, I hope that covers it.
So overall, quite an assortment of data sources. Absolutely great. John, over to you.
Okay. Our second question is on the model and the interaction effects. Please review one or two of the more interesting insights.
So this is a great question. What I wanted to do, if I could control the slide set for everybody just for a second, I wanted to take us back. Great, thank you. Let me see if I can affect this. Here we go. Maybe there we go. Okay, I don't seem to have the magic touch, but here we are moving. So I think, yeah, if we stop on slide 32, no, other way. Let's see here. Yeah, one more. There we go. Yeah, so we did mention the one particular case of almost a counterintuitive interaction effect that would be quite important to understand. And let me give this a shot then, since this question came up, and the reason why we skipped it a little bit is the time. But this lower right example of what initially would seem rather counterintuitive is interesting. What the case is here is a case where we're looking at payback time for investments, and specifically we're looking at payback time for investment in homes in energy efficiency in the year, in this case, 2050. And one would be a little bit surprised to say that if you have an average home with a PV system, why is the overall payback time longer in this case? Well, the facts on the ground are such that if you invest in energy efficiency, you will end up needing less power in the house. More power from your PV panel will now flow, compared to the other case, will now flow back to the grid because you use less at home. And the reality of sending power back to the grid is such that you don't get necessarily, and in our model you don't get paid in the year 2050 for anything but the energy charge. You only get paid for the energy. You do not get paid the retail rate. And so at that point, what you're seeing is less revenue attributed to your PV system. And overall, therefore, because you only get paid for the energy of it, no longer facing the opportunity cost of displacing grid power, which includes the grid charge, you will see less revenue attributable now to the PV system. So by doing energy efficiency in a house with a PV system installed, one interesting example is that it will lengthen the payback time of your PV system in a realistic interconnection scenario. So that's one example. Let me stop there. But there are many other examples of the need to carefully track the interaction effects. In this case, in this example, it's on a standalone building, if you will, but with an interconnection. I don't know, Danny, if you have other examples, but in the interest of time, let's perhaps move on if there are other questions. Over to you, John.
Okay, I'm going to, in the interest of time, there's one more question I'm going to throw your way, and it's on changing IT landscape, supporting this transition. Could you say a little bit more about this new IT landscape and what are you seeing now?
Sumit, Kumar, I think that would be for you.
Sure. I know that we have very little time, but it's about managing the transition. So you already have the landscape. Now how you add more to it so that you get the personalities out of the facts which were already there. You add more perspectives. So for example, the big data. So it's not that you had a profile information of the consumer from your old data warehouse and your old intelligence, but you are adding more to it. You are adding the personality of that particular user to that. And to deliver a service to the immediately, just we were talking. So it's about probably in-memory processing, so you can do it very fast and deliver it. So it's not a disruption, it's about managing the transition and how you add on to your capabilities to deliver the services which the business needs.
Okay. Well, it looks like we're topping the hour, and we need to be respectful of everybody's time and conclude promptly. This will conclude our question and answers. If your question was not answered, we will go ahead and forward that to Sumit and Odd Even and ask them to answer the questions, and we will get back with you regarding your questions. Guys, we thank you for your presentation, and we thank you attendees for attending our webinar. This concludes our webinar for today.